In this video, we'll talk about what a couple of popular analysts said about Dogecoin, chart analysis, and some predictions for it. Hello guys, and welcome back to Crypto Fire, where we talk about Dogecoin, cryptocurrency, and investing. Before we go any further, please keep in mind that we're giving away $500 to a random subscriber. All you have to do is like the video, subscribe, turn on post notifications, and leave a comment on your favorite crypto. Read our description for more info about it. Now, let's get started with today's video. Let's look at the charts for a minute. Doge is forming a bullish flag pattern on the daily and hourly charts, and it seems like Doge can run up to test the resistance level of 30.5 cents tomorrow. In the daily chart, we see 3 consecutive candles. And if you draw the same trend lines I have there, you will see that the latest green candle on the daily is almost done breaking above the resistance level of 31 cents. Also, a successful bounce from 26.2 cents to 28.1 cents demand zone earlier this week indicates a resurgence of buyers. It looks like bulls are coming back into the market. So, I think if Doge breaks through the 31 cents level again, 32.8 cents will be its next resistance level. And if Doge breaks above that too, we could see it quickly jump to the 40 cents level from there. Moving on, a couple of analysts who run really successful companies had some really negative thoughts about Dogecoin. The first one was Michael Kammerman, the CEO of Skilling. Initially, he talked about the reasons why Dogecoin has taken off this year by saying that Dogecoin has set itself apart from other cryptocurrencies only because it is inflationary, meaning there are no limits to the numbers of coins in circulation. This, in turn, is intended to maintain the incentive to mine by removing the cap on coins. However, the main driver behind Dogecoin's popularity is its online communities, coupled with support from high-profile business magnates like Elon Musk. The resurgence in attention to Dogecoin, which was originally launched as a parity currency, may seem attractive to investors due to its volatility, but for the currency to ever have intrinsic value, scalability and security issues need to be addressed. While he did make some fair points about how Doge has risen, partly because of Elon, I strongly disagree with some of his other comments. He was implying that Dogecoin doesn't have intrinsic value because of its scalability and security issues. But I think he probably isn't aware of the Dogecoin Foundation, which was recently revived to address the exact same reasons. In any case, I don't think it's wise to buy into FUD like this. Moving on, the second analyst was the founder of Money Under 30. He said that everyone loves to speculate on Dogecoin, but it's important to remember that Dogecoin is a parody of real cryptocurrencies. Unlike Bitcoin, Dogecoin has no hard cap. Unlimited Dogecoins can be created. Now, while this is true, I'm not really sure what's his argument here. If he's trying to say that this will work against Dogecoin in the future, then he probably doesn't know that Dogecoin's deflationary mode will soon be activated because of Doge Lab's new wallets. And then there's the Ethereum and Doge bridge, which will also probably help Doge burn millions of coins every day, thus keeping its value in check. The point is that we need to keep ourselves aware of what's coming for Dogecoin before we form any conclusions about it. Moving on, let's look at a couple of other things that we need to address here. Recently, in a tweet, Mr. Whale said that Bloomberg says Bitcoin is going to double in price and hit 100,000 by the end of this year. The corrupt media desperately wants to lure in more suckers before pulling the rug. Don't fall for their traps. Now, first of all, it's pretty sad that he's not given any reasons for this. Secondly, if you remember, I talked about a really reliable predictor of Bitcoin's prices, called the stock-to-flow model by Plan B. According to them, Bitcoin was supposed to end September at 47K, and that's exactly what happened. And also, according to them, Bitcoin is going to reach 135K by December, and that's their worst-case scenario. Now, we're obviously addressing this because Doge is closely following its trajectory right now, with a correlation of over 75. So if Bitcoin reaches 135K, Dogecoin is also going to reach around $1 by December, and this is why it's important to not buy into predictions with no evidence or success rate. Now, in another tweet he said that Microstrategy Insiders are now dumping millions worth of shares. They used Bitcoin as a marketing ploy to pump their stock and are now rushing to sell. Same tricks, different year. Saylor also pulled this same deceitful stunt during the dot-com bubble. Now, while it's true that Microstrategy's insiders are dumping their stocks, we have no reason to believe that Saylor used Bitcoin to pump its shares, or that his apparent ploy has worked to pump its prices in the first place. At this point, it looks like Mr. Whale is trying to spread FUD in the market. Maybe he's trying to scare off the retail investors so that when Bitcoin's price and then Dogecoin's price falls again, he could accumulate at lower prices. Anyway, let's talk about exactly what Bloomberg had to say and their reasoning behind their prediction for Bitcoin to 100K. Basically, in the September edition of Bloomberg Crypto Outlook, their senior strategist said that he thinks Bitcoin will reach 100K. He also said that crypto assets appear in a revived and refreshed bull market with the 2H benefit of a steep discount from previous highs at the start. He also said portfolios lacking BTC or ETH exposure are naked, as evidenced by the relative underperformance of gold and government bonds. And then he said that portfolios of some combination of gold and bonds appear increasingly naked without some Bitcoin and Ethereum joining the mix. A macro risk-off decline is a primary threat for the crypto bull market. We believe Bitcoin represents the digital future. We foresee a future of Bitcoin, the digital reserve asset, complementing the dollar reserve currency. Moving on, another prediction for Bitcoin came from the CEO of Chainalysis. It's really bullish because Chainalysis is considered a huge authority when it comes to crypto analytics. So, he said that, in the bear market, a lot of interesting things have been built, and that basically facilitates a new bull market, he said. Yes, I think we're still in a bull market. I think we can see above 100K by the end of the year. For most of the cryptocurrencies like Bitcoin and Ethereum, the most stable ones, we just need to see that trend where they grow year over year. Sometimes they grow faster than others. Long term, usually you say the moon is the limit. We can go up beyond that as well. Now, as you can see, he's really bullish on Bitcoin. And it's pretty because a lot of people will actually listen to him, and it'll decrease some FUD in the market that was created by the analysts that we just talked about. In any case, it's my job to tell you about all the bearish predictions as well, just so you have the complete picture of the market today. So let's talk about another bearish prediction that you should probably know about. This one came from the CEO of a black swan firm called Universa Investments. His prediction is quite important because Universa Investments' hedge fund returned over 4,000% profits in the first quarter of 2020. Also, if you don't know, Universa specializes in tail risk investment strategies that pay off during periods of market stress. So its CEO said that gold is pretty darn good. You just have to understand there's been a lot of noise around it. Cryptocurrencies are a fundamentally terrific idea, and I'm aligned with the thinking behind them, the destruction of our money through the actions of central banks, and the dangers of the banking system as a result of that. It's turned itself into a casino, which is a very bad idea. It's killing the golden goose in many ways. It's massively noisy and not a very safe haven at all. So, there you have it. According to him, gold is going to outperform cryptos as a hedge against inflation. But I think he's forgetting that cryptos like Doge have yielded a 5,000% return since January, while people who invested in gold during the same time are at a loss right now. In any case, now that you have the complete picture, I'd love to know where you think we're headed from here. So let me know in the comments section below. And with that, we've come to the end of this video. Thanks for watching till the end. If you enjoyed it, please consider liking and sharing it with your friends. Also, please subscribe to the channel and turn on post notifications for daily videos on Dogecoin and cryptocurrency. If you have any questions or suggestions, please leave them in the comments section below. Goodbye. Take care.